Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Let's start with data from China, where retail sales was up 2.3% year on year in April from 3.1% in March, below 3.8% forecasted. Fixed asset investment was up 4.2% year to date in April, also less than expected, while March industrial production improved 6.7% year on year, better than 5.5% expected. Slowdown in retail sales reflects tepid domestic consumption, which could get a boost as we get the kicking off of a 6-month program for issuing decades-long bonds. Data also in China showed the urban unemployment rate in April easing to 5%, down from March's 5.2%. Meanwhile, the Dow Jones Industrial Average briefly crossed the 40,000 major price level as equities are still being boosted following a US inflation print showing price growth continuing to abate, finding fresh hope for Federal Reserve rate cut. The Dow Jones, however, ended down 0.1%, narrowly in the red at 39,869. As we speak, futures already gone over 40,000. The S&P 500 also closed down 0.2%, and the tech-heavy Nasdaq fell 0.3%. And retail bellwether stock Walmart soared nearly 7% yesterday after beating quarterly earnings and revenue forecasts and seeing 22% growth in their e-commerce business, beginning to challenge the likes of Amazon. And the IMF has said that the US is not helping economic global growth in its combative approach to China. This is as White House National Economic Advisor Lil Brainard says the scale of China's industrial capacity and exports in certain sectors are now so large they can undermine the investments in the US and other countries. And Chevron exits the North Sea in the UK after 55 years, although they say it's not about high windfall taxes. Boeing's board is looking for a CEO to steer the US plane maker out of its worst crisis in years, as they need a new leader who can make a fresh start. The new CEO will be experienced to navigate a heap of problems, including a potential criminal case involving 2 fatal 737 MAX crashes, even as the turmoil for Boeing seems to be going from bad to worse. It's already 2 years since Middle East mega carrier Emirates Airlines suspended flights to Nigeria, and they've now announced the resumption of flight services from October 1, 2024. That's Nigeria's independence day. Something the Tinubu government can tout as another quick win after a year in government, as a difficult transition presents many complex challenges. Walmart beats quarterly earnings and revenue expectations as they saw gains in their e-commerce business, also driving advertising profits and margins coming from high-income shoppers. They now expect to exceed earlier full-year guidance, and they are signaling a resilience in the US shopper as American shoppers open their wallets to spend more than expected, and customers are turning to Walmart's delivery service for convenience. Its shares surged almost 7%, driving shares of rivals like Target also higher, as the full-year outlook was better, and so was reported first quarter results. Also, Procter & Gamble, which is one of Walmart's biggest and most important suppliers, had previously raised their full-year profit forecast, adding that sales volumes were also seeing decent growth. A strong outlook from Walmart is a positive verdict on the health of the US economy and the spending appetite of consumers amid all the uncertainty driven by inflation. Chevron is selling their remaining UK North Sea oil and gas assets, a move that marks exit from the aging basin after more than 55 years. This comes as Chevron prepares to acquire rival Hess for $53 billion, partially financed by $10 billion to $15 billion in asset sales around the world. The sale does create opportunities for potential acquirers such as independents seeking to grow in the UK. Meanwhile, Chevron's planned acquisition of Hess has hit a stumbling block due to a legal conflict with rival Exxon over assets in Guyana. Chevron is also confirming that the North Sea sale process is not related to a 35% windfall tax imposed by the British government after the surge in energy prices in 2022. The trend of consolidations to improve margins means older, more expensive basins in tougher fiscal environments are being sold to expand into the more profitable blocks. Higher financing costs and inflation of inputs also requiring better returns makes marginal fields less of interest for the bigger players. The windfall tax, driven by fiscal stress in many government purses, has not helped, and erosion of capacity to reinvest worsens the case to remain in basins like the North Sea. It may be time to reconsider some of these taxes. And in the US, White House National Economic Advisor Lil Bernard yesterday commented at the Center for American Progress, that's a liberal think tank, that the scale of China's industrial capacity and cheap exports are hurting viability of investments in many countries. The IMF, however, disagreed with the US, saying that the US should be better served by maintaining their open trade system rather than imposing new punitive duties on Chinese goods. The IMF also urged Washington and Beijing to work together to resolve their trade tensions using established protocols like in the World Trade Organization. IMF spokesperson Julie Kozak told a regular news briefing that trade restrictions, as those announced by President Joe Biden, will distort trade and investment, will fragment supply chains, and are set to trigger retaliatory actions. Obviously not helpful for the global economy. There is little that the IMF can teach the US, noting that the US wrote the rules that the IMF was set up to maintain. These rules just don't serve the interests of the US when it comes to China, and Biden is not required to explain in more detail the security issues requiring protection of US markets and citizens, used maybe as a pretext for these actions. Rather than require in vain for the US to change its approach with China on trade or to expect to bring its grievances to a WTO that is riddled with booby traps in terms of getting any speedy resolution, the IMF should understand individual country interests are equally important, especially for less prominent voices and smaller countries trying to get their fair share of global trade. At the same time, the US and China are jostling to gain the edge in a tepid trade growth scenario. And other critics have lampooned the US for poor leadership at a time many are reverting to economic nationalism, which is reshaping the globalization we know. Traders appear increasingly confident that the US Federal Reserve could start cutting interest rates as early as September, after inflation data cooled more than expected in April. But many are far from convinced, as the narrative from senior Fed officials seem to support a more hawkish position. Fed Reserve Bank of Cleveland President Loretta Mester yesterday said in her speech at the Wayne Economic Development Council, Ohio, that holding US central bank policy at current levels is needed to bring inflation back to the 2% target. Microsoft said yesterday it would offer cloud computing customers a platform of advanced micro devices, artificial intelligence chips that will compete with components made by NVIDIA, promising more details to be unveiled at the Build Developer Conference next week. Microsoft shares are up 35% from a year ago. AMD also up 61% in the last 12 months. NVIDIA up 210% from a year ago. Meanwhile, the Dow crossed an all-time high of 40,000 for the first time, albeit briefly, yesterday. Futures already over 40,000. As investor hopes of interest rate cuts by the Federal Reserve were fanned by the data showing inflation abating, as well as stronger corporate earnings, of course. The Dow Blue Chip Index has recovered nearly 40% from its October 2022 lows in a remarkable recovery. The question many ask is, why are US markets rallying and looking set to go even higher? I see three factors playing a strong role. First, technology innovation and competition, specifically progress in artificial intelligence, is driving fresh growth in revenues and seeing much faster potential monetization. Second, there is a monetary optimism or confidence that the economy can expect reduced cost of capital as interest rates and inflation are trending down. Kudos to the Federal Reserve policy framework, which is proving robust and reliable in its data dependence and cautious oversight rules, giving confidence that the monetary situation is well under control. And then, of course, the resilience, the evidence of a different flexibility driven by quicker corporate response to ride headwinds, even achieving higher levels of earnings performance. To the extent that all these factors reinforce each other, the likelihood is that the momentum of growth, at least in the near term, will continue to be sustained. Talking of technology innovation, let's not forget that the so-called Magnificent Seven did not become magnificent overnight, and many tech ventures have had shorter shelf life. Indeed, only those that have managed the difficult reinvention that is required to survive often hostile disruptions have stayed afloat, emerging even stronger. Looking at the early days of the Magnificent Seven, many started in home garages, incubated ideas in university labs, pointing to the importance of incubating knowledge in well-funded centers like universities and technical science platforms. Professors nurturing dreams, ideas, and theories to mentor students who could run with concepts to change the world may have been undervalued in the advances that we are presently seeing nurturing such huge results. The environment that embraced constructive failure and venture capital that forgave many experiments as young lads from garages sold their belongings, delivering the baby steps of what we see today. All these are key. Hunger and poverty nurture strife and not innovation. The existence of welfare nets that free people from fear to patiently nurture their dreams and venture capital that forgives entrepreneurial failures are all part of the ecosystem that sustains dreams until the eureka moment. On monetary optimism or the rare business confidence, the financial system needs cushions to comfortably extend credit leverage to chase the best ideas. It takes more than money to move from a garage to a $1 trillion company in 2 decades. But affordable financing, whether from relatives or a helpful bank relationship manager, has helped. And on resilience, in face of headwinds, as COVID stopped the clock for months, many saw opportunities in new automation, digitization, hybrid work, and far-reaching transformative ideas that would not have birthed if not for adversity. JPMorgan Chase CEO Jamie Dimon recently on Biden tariffs said the US needs to engage with China and view it as a competitor rather than a hostile power. I would add that Biden is pushing its enemies to align against its interests, motivated by an unnecessary fear. But do not expect the ballooning Wall Street rally to burst soon. Instead, countries and other markets should try and learn from factors contributing to it. And looking at Asian market, they're mostly down as investors assess to the latest retail sales data that came in less than expected from China. Nikkei 225 down 0.43%. Hang Seng, that's the Hong Kong index, up 0.48%. Both the Shanghai Composite and the Shenzhen Composite are in slightly positive territory. And Kospi, that's the South Korean index, down 1%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share and kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.